Paramount just spent $170 billion to beat Netflix in a bidding war for Warner Brothers Discovery.
Which is insane, because Netflix was the one who destroyed them in the first place.
Poetic, right? And then Devon and Coterra quietly merged for $58 billion, and nobody's even talking about it.
Because regulators are already circling Paramount like sharks.
You think it falls apart?
I think the antitrust math is brutal. We'll get into it. The rundown.
Okay, so Boston Scientific just dropped $14.5 billion to grab Penumbra. Neurovascular play, stroke intervention, brain stuff.
Big bet, and honestly a smart one. Penumbra's been quietly building out some of the best clot retrieval tech in the space. Boston Scientific needed this.
Needed it or wanted to keep someone else from having it?
Nate, those are the same thing.
Fair. Moving on, Banco Santander buying Webster Financial for $12.2 billion. Transatlantic banking deal, a Spanish giant eating a Connecticut regional.
Webster is a solid, boring, profitable bank, which is exactly what Santander wants in the US right now.
Boring is underrated. I say this as someone who once spent 6 months on a SPAC deal.
We don't talk about that period.
Agreed. Lonza next. They're selling the Capsules and health ingredients division to Lone Star funds, but here's the twist. Lonza keeps 40% equity.
So they're selling it, but not really selling it.
It's a carve-out with a security blanket.
I actually think that structure makes sense here. They get the cash, they offload the operational headache, but they stay in the upside if Lone Star turns it around.
Okay, sure. When you say it like that, it sounds smart. Pro Ampac acquiring TC Transcontinental Packaging. Flexible packaging consolidation.
Unglamorous deal. Extremely necessary deal. The packaging space has been screaming for this for 2 years.
And then there's my personal favorite headline of the week. A group called 2.0 bought an Italian packaging company called ISEM for, wait for it, AED 704 million.
Why are they paying in dirhams?
Dubai-based acquirer, luxury packaging. Apparently gold boxes and embossed tissue paper are a growth market.
I mean, if you've ever bought anything from a high-end retailer, you know the box costs more than the product.
The box is the product, Maya.
Okay, speaking of things that cost an absurd amount of money, we should talk about the Paramount Warner Brothers situation, because that number is genuinely unhinged.
$170 billion, with regulators already sharpening their pencils. Yeah, that's the main event. The big one. Okay, so $170 billion. I just need to say that number out loud because it doesn't feel real.
It barely is real. This is still reported, not confirmed. And every time I see staggering victory in a press release, I reach for my antacids.
Fair. But if Paramount actually pulls this off, if they close Warner Brothers Discovery at 170, that's not just a big deal. That's a reshaping of the entire streaming landscape overnight.
Which is exactly why regulators are already circling. You've got two of the largest content libraries on the planet combining under one roof. Every antitrust office from Washington to Brussels is sharpening its pencils right now.
And yet the stock market isn't panicking, which tells me deal makers at least think there's a path through.
Or they think they can carve enough off to satisfy regulators. Spin a network here, license a sports package there, death by 1,000 divestitures.
That's actually a great way to put it. You end up buying a $170 billion company and emerging with, 60% of what you wanted?
Happens more than people admit. But here's what I keep coming back to. Netflix was in this bidding war. Netflix, the company that a decade ago was mailing DVDs in red envelopes.
And now they're losing $170 billion auctions. That's a sentence I never expected to say.
Neither did Reed Hastings, probably.
Okay, but I want to push back on your skepticism for a second. Even if regulators force concessions, the strategic logic here is genuinely compelling. Paramount gets HBO, gets CNN, gets the Warner Film Library. That's not nothing.
No, the library case is real. I'll give you that. The question is whether the debt load survives the regulatory timeline. These reviews take years, Nate. Years. And debt doesn't wait.
Which brings me to the bigger pattern. Because Devon-Coterra just announced a $58 billion energy merger in the same week.
And overall, deal volume is down 22% year over year. So we're getting fewer deals, but each one is enormous.
PwC is calling it K-shaped. Big strategic buyers swinging for fences, mid-market completely frozen.
Which makes sense when financing costs are still elevated. Only the balance sheet giants can actually close.
So the rich get richer and everyone else waits for rate cuts that keep not arriving.
Exactly. And the first real test of whether this Paramount deal survives is going to come from regulators in the next few days. We're watching for the initial posture signal. Any hint of a formal probe and media stocks are going to have a very bad morning.
So eyes on that. And speaking of things that cost absurd amounts of money for reasons nobody fully understands, voices.
Okay, EY dropped something interesting this week. Their analysts are saying rate stability, not low rates, stability, is the real M&A catalyst right now.
Which is such a banker thing to say, I know, but they're actually right. You can model around a rate, you can't model around a guess.
Exactly. Certainty has a price, and apparently that price is a 65% surge in tech deal value, $43.2 billion in January alone.
On lower volume, though, that's the part people are glossing over.
That's the whole story. Volume dipped and value exploded. So you've got fewer deals, but the ones happening are monsters.
Which is exactly what PwC is calling the K-shaped recovery. Big strategic buyers going absolutely wild up top, mid-market completely starved out at the bottom.
I hate that framing a little,
Why?
because K-shape makes it sound like a natural phenomenon, like weather. It's not. Tighter financing conditions are a policy choice. The mid-market isn't struggling because of gravity.
Okay, fair, that's fair. But the mega deal reality is real regardless of what you call it. Devon-Coterra at $58 billion. Paramount potentially swallowing Warner Brothers for $170 billion. These aren't flukes.
No, they're not. And then on the gossip side of the ledger, Ben Affleck sold his AI startup to Netflix.
I'm sorry, what?
AI post-production, Netflix bought it.
Was it actually good, or did Netflix just want Batman at their holiday party?
That is genuinely unclear, and I respect the ambiguity.
The Daily Telegraph one is more interesting to me strategically. German buyer, $575 million, a newspaper famous for screaming about foreign ownership, is now foreign owned.
The footnotes on that irony write themselves. Speaking of writing themselves, we need to talk about what's actually inside these megadeals because the structures are wild. Spill the tea. Okay, Ben Affleck sold an AI startup to Netflix. I need a moment.
I know. Batman is in the AI post-production business, was past tense. Netflix just bought him out.
Do we think Netflix bought the company, or do we think Netflix bought Ben Affleck?
Genuinely cannot tell you. And I've been thinking about this for 2 days.
Because here's my skeptic read. If this startup had real technology, we'd have heard about it before the acquisition. The fact that we're only finding out now because a famous face is attached to it is not a great sign.
That's harsh.
Is it wrong?
No, but I'd push back slightly. Hollywood has actual IP problems that AI post-production can solve. De-aging, dubbing, localization at scale. If Ben Affleck spent his downtime between bad movies actually building something useful...
Downtime between bad movies, Nate.
I said what I said, I'm just not ready to write it off as pure celebrity theater.
Fair. File it under wait and see. Meanwhile, the Daily Telegraph sold for £575 million to a German buyer.
The irony is almost too perfect. The Telegraph spent years writing anxious editorials about foreign influence and media sovereignty.
And now a German media group owns it.
The headline writes itself. Whoever does their editorial strategy must be having a very uncomfortable Monday.
Press freedom theater was the phrase I saw used, which, honestly, accurate.
Very British Saga has a similar energy to politely catastrophic.
On that note, we should probably talk about the deals that actually move markets this week, because there are some genuinely massive numbers to get through.
The boring stuff. My favorite. Tomorrow's radar.
Okay, so tomorrow. Antitrust posture on Paramount Warner. That's the one I'm watching most closely.
Same. Any hint of a formal probe and media stocks are going to have a very bad morning.
Very bad morning. And look, regulators have been pretty aggressive lately, so I wouldn't assume a green light just because the deal is enormous.
I'd actually flip that. Enormous might be exactly why they move carefully instead of fast.
That's very optimistic of you.
It's called nuance, Maya.
It's called cope, Nate. Also watching the Nuveen fund mergers, BXMX and DIX folding into SPXX before March 30th. Final closing confirmations should land this week.
That one's quiet, but real money is paying attention.
And keep an eye on LIFRS in Japan. 4 child development facilities May 1st closing target, and Japan's foreign investment review is getting tighter by the month.
That one might slip.
That one might absolutely slip. All right, speaking of things that might surprise you, we've got some gossip that genuinely made me stop scrolling.